Hi, and welcome to the channel. My name's Michael,
And my name is Shane.
and we are the Trending Traders. If you enjoy our content, please consider giving this video a like and hit that subscribe button.
All right, everyone, let's jump right in with our first ticker. This is BLNK, Blink Charging Company, based out of Florida. This company is an EV charging provider offering both commercial and residential access to their Blink charging network, their charging equipment, and their payment services. Kind of a one-stop shop. So if we look at the service map for the US here, it's pretty easy to see that there's not a lot of coverage unless you're on the coast. For people like me in Denver, it would seem that Blink does not have much of a service at all. It would seem, however, that the company is looking to improve upon the volume of equipment that they have in service. They have recently closed deals with the state of Vermont to install 11 new units across the state, and Blink has also recently closed a deal with the city of San Antonio, Texas to install 140 units across the city. Despite these pen deals and the acquisition of other small EV companies, they're still sitting at a mere 23,000 charging units globally. In comparison to the numbers of ChargePoint, which we'll discuss shortly, this is pretty minuscule and honestly hard to fathom. Considering this company has been around since 2009, the expectations for growth are not being met very quickly. Less than 2,000 units installed per year is nothing in the grand scheme of things. Digging through SEC filings may reveal the reason why Blink is seemingly so stagnant. If you take a look at their operating expenses, you'll notice something missing that's pretty standard for most tech companies. Research and development is what gives a growing company their value. Adding intellectual property and patents is seemingly something Blink is not interested in. Rather, their business model consists of buying small EV companies along with their IP. Hardly some business model when you take into account the fact that Blink only has 4 patents to their name so far. 2020 was hard on us all, but Blink reported a net loss of almost $4 million in comparison to 2019's net loss of $2.6 million. This change in net loss is certainly something to consider in an industry that is booming. Those numbers don't seem to make sense until you take a look at some other operating expenses. Administrative expenses more than doubled from 2019 to 2020. When you consider the state of many businesses during the pandemic shutdowns, I think the increase in admin expenses brings into question the motivations of Blink's CEO. Despite the hype and growth of this stock since IPO, it seems to me that there are better EV companies to invest your money into.
Okay, guys, our second ticker is PLUG. Plug Power is an alternative fuel cell and energy company, and they're headquartered in Latham, New York. This company focuses on developing, maintaining, and supporting hydrogen fuel cells. Hydrogen fuel cells are much like a battery, except that they're charged with chemicals, in this case hydrogen gas, and can be charged very rapidly. While they are a promising company, they definitely have some major risks. Taking a look at this SEC file, we see some risks include being dependent on hydrogen gas from their vendors, obviously. Without the delivery of this hydrogen, they cannot fill fuel cells. In their SEC filing, that failure of supplier to develop and supply components could impair our ability to manufacture our products or could increase our cost of production. Another listed risk in this SEC filing is that they face stiff competition from other US companies such as Bloom, PowerCell, and much bigger names like Bosch. They say some of our competitors are much larger than we are and may have the capabilities to complete research, development, and commercialization of products more quickly and effectively than we can. However, they have secured their financial position significantly, including 100 million in cash and cash equivalents year over year from 2018 to 2019. They also increased the restricted cash and net working capital by substantial amounts. Given the large increase in stock price recently, one would expect to see that Plug may have had some number of insider sales. This includes the CEO making $35 million in January on his exercised options. Now, all of this isn't to say that Plug is a bad company. Frankly, if I were in their position, I would also probably sell some of my options. The weighted average of their option strike price is about $2, and it is part of your compensation package. For a reason, you have the right to buy and exercise these options. I think what makes me most excited about Plug is that they have a very robust R&D budget of about 12 million per quarter. They are producing with that R&D budget, which is also something I'd like to see. As a scientist myself, I can attest to the value of investing in intellectual property, patenting it, and leveraging that IP for either cash or new products. As this is turning out to be a good strategy for them because they are producing many new patents to complement their technologies. The future is bright for Plug, and I believe it'll be the right time to buy their stock very soon.
Last but not least on our list is the soon to be public company known as ChargePoint. This company will make its debut on the stock market shortly through a reverse merger with Switchback Energy Acquisition Corporation, commonly traded as SBE. And for those of you who have been following the meteoric rise of the electric vehicle sector, ChargePoint is a name you should be familiar with by now. They are easily the largest provider of charging stations across the country, offering over 111,000 different locations to potentially charge a vehicle. This great coverage, along with their outstanding 24/7 customer support and their highly intuitive app, has truly propelled ChargePoint as the clear leader of industry standards. This is made even more apparent when you consider this company has over 20 patents pertaining to EV charging solutions since their inception in 2007 and countless awards for sustainability to go along with that. ChargePoint was the first EV charging provider to be certified by Energy Star for energy efficiency, so it should be no surprise that 60% of Fortune 50 companies are currently ChargePoint customers, and that number will certainly grow in the future. Until this company is officially public, we won't know the true value of this stock, but I think time will prove that ChargePoint will make a great addition to anyone's portfolio.
Okay, so I'd like to provide a brief chart analysis for these three stock tickers, namely BLNK, PLUG, and SBE. So here I'm showing the 6-month, 4-hour chart, and you can see a striking similarity between these charts. These three charts all move basically identically. For example, Blink chart shows a prominent spike around 11:12, and so does Plug and SBE. This indicates to me that all of these three stocks trade as a sector or as a block, and that when news comes out for one that positively or negatively impacts it, it will affect the whole sector. Since all three of these stocks are very closely tied in the EV market, I think that makes sense, but it's something to be aware of that when you see news for Blink or Plug, it may affect the others. Since these three stocks are so closely tied in their sector, I think that makes pretty good sense. To me, it looks like the news tends to spike Blink just before it spikes Plug and SBE, following about a day or so after. In each case, one can see that the RSI is in the oversold territory for each one of these stocks, and they're sitting about 35, 41.5, and 29 for each one, Blink, Plug, and SBE respectively. So the question is, there's this big market sell-off. If you are bullish on these stocks, when is the right time to buy? Well, I'm displaying the three 30-day and 90-day moving averages in orange, green, and fuchsia respectively to show the overall trends of these stocks. One can see that the orange 3-day moving average line obviously tracks with the stock price very closely. Once it crosses over the 30-day moving average, shows a confirmation, and the 30-day line will eventually cross back over the 90-day line, I think it would be a solid time to invest in these stocks. Given their current value, I can see that they easily double in the next few weeks or months. I'm trying to be patient with these plays because they are so volatile. Try to get in near the bottom, hold it through the volatility, and sell when it's a bit higher. But I think each one of these plays are easily $60, $70 stocks. Make sure you know what you're getting yourself into with each one of these plays. Make sure you secure your own DD so that when the stocks sell off, you know if you should be worried or buy the dip.
Thanks for stopping by our channel today. We really appreciate you watching our video. If you have any comments you'd like to add below, we'd really love to hear from you. And as always, I'm Shane.
And I'm Michael.
We are the Trending Traders, here for you and here for growth.